Hello, this is Pat Walker at Mission Winners. We're doing a training coaching video for everybody. Just want to pause and think for a minute here. Let's pull back a little bit. Think about charts. We're looking at a chart of the spiders. And what does it show? This is a daily chart. And really, charts show something that's neat. They show complacency in a nice trend. They show fear when it drops. They show maybe complacency here. They can show panic in here. I mean, this is a panic bar right here. All right? That's a panic bar. There are panic bars in here. That's a positive bar, but it still closes down. How does it measured? It's measured by price action and volume. And everybody wants to try to catch the bottom. There's also something else that's very interesting. If we're really pragmatic, studying charts show us something and teach us something. A really good chart reader, I'm going to say this again, a really good chart reader has a PhD in psychology. You can say, Pat, why do you say that? Because every chart is a reflection of human emotions. Fear, greed, panic, complacency. And you know what? We can see it in the chart. And we can act on it. And that helps us be better investors. I'm not trading here, okay? I don't look at 5-minute charts. I really don't. Now, if you do, that's fine. I'm not casting stones, okay? We don't do that. But our goal is to find stocks that have a very clean and simple entry pattern that allows us to get in, allows us to ride trends, allows us to get out. You think about it. A chart that has a longer base reaches an equilibrium point. Here's the spiders. I'm going to show you some past keyless stocks. All of these have some common traits. Here's the first one. InMode. Right here. It's a longer base. And look at the investor psychology. It went down on heavy volume right here, and then it went sideways, and then it went up on a pickup in volume. See that? More buyers than sellers. This pattern, if we're really analytical here, and we should be, it runs up, it goes sideways. What's a sideways chart pattern telling us? There's a tug of war going on between sellers and buyers. That's all. And eventually, in that tug of a war, one of them's going to win. Either the buyers are going to win or the sellers are going to win. And how is it measured? It's measured by price going up or price going down. It's really that simple. You don't have to overthink it. I'll say this just to drive home a point. A stock is going up in price. Why? Because there's more buyers than sellers. People say, oh, it's because they're in a great group and they've got great earnings estimates and the market's good. You can give me all that fancy-ass stuff, but I'll tell you the truth. Let's be blunt. Unless there's more buyers than sellers, the stock's not going to go up in price. So that's what we look for. Now, am I big on fundamentals? Most certainly. It's a fact. It's not an opinion. Most super stocks have either earnings up 40% or higher or average sales up 40% or higher. So why not stack the deck in your favor? The vast majority of super stocks are within 15 to 20% of 52-week highs when they start their move. The vast majority of super stocks are over $15 a share, all right, and trade 200, 300,000 shares a day. That's what we're looking for. We're trying to stack the deck in our favor. It's very similar. I coached baseball for years. In fact, this is kind of neat. Years ago when I was coaching, guy who used to practice with us, it's a guy named Max Scherzer. How about that? I'm going way back, okay? He was a young boy. But yeah, he practiced with us. It's not because I'm the great coach. That's not the point. Just the guy had a gift. And he has a gift, gee whiz. Let's go back here. So here's InMode. A tug of war. And then finally, right here, volume comes into it, and it pushes across these tops. What does that tell us? This is where we're buying here and here. What was that telling us? The buyers are winning. How can I say it? It's going up in price. Goes up, goes sideways a little bit, and then look at these bars here. Look at the volume. People talk with their mouths and vote with their pocketbooks. The point is this. It's a longer base. It had great earnings when it went up, and it had great sales. It was a keyless stock, and it took off. It's just a nice move. Just a really simple move right here. It's close to a double. All right? Here's number one. Here's number two. Acacia, keyless stock. Earnings were up 193%. Look, it goes up, it pulls back, and goes sideways for several weeks, and then it starts to pick up on a pickup in volume. We bought this back in 2016. Buy price 45.05, right here. And it made that march. And look at it trend up the 8-day exponential and the 20-day simple. We don't have to overthink it. And then it makes the move. It goes sideways. And when it goes sideways, again, folks, think it through. What is this? This is a tug of war between buyers and sellers. And everybody's watching. And finally, the sellers win. It loses these levels. The buyers that bought earlier lock in their profits, selling. And it's reflected in volume, price and volume. There's your PhD in psychology. Here's another one for you. Square. It runs up, it goes sideways. What is this? It's just a consolidation. It's showing there's a tug of war between buyers and sellers. This is a Maxless stock, by the way. And then finally, it pushes through. By the way, sales up 45% when it broke up. Right here. And look at that walk up the 8-day. Is that beautiful? Now, do they all do this? No. But again, if we apply these rules of looking for stocks that have gone sideways for a couple of weeks or longer, the longer the better, and it lifts off on volume, and it has either great earnings or sales. And look at right here. Look at where it lifted off here, and look at the volume pickup. Goes up, and this is the tug of war between buyers and sellers. Finally, the buyers overtake the sellers, and it makes another march. That's simple. Sales were up 45% before it broke out. I will say this again. You will increase your odds of making money if you focus on stocks that last quarter's earnings were up 40% or higher, or average sales for the last 2 quarters were up 40% or 45% or higher. It's that simple. Here's another one for you. Just study the chart. Look at this. It's made a good move, and then finally, there's the tug of war between buyers and sellers, back and forth. I mean, right here, the sellers won, didn't they? They took it back into the base, down low, and it goes up. But look at that volume bar there. Look at that. Big spike. Goes up, pulls back on less volume. Starts to move up again on so-so volume, and then it pulls back on low volume. When a stock pulls back on low volume, like right here, what does that tell us? Think about it. Price and volume. It goes up on heavy volume. It pulls back on less volume. The sellers are winning, but there's not a lot of sellers. Finally, and again, this is so exciting, it pulls back. The last of the sellers are gone. They got out. How can you tell? Because any buying right here starts to push that sucker up in price. Right there's the entry. A longer base. I'll pause here and say something. This is important. Please don't think it only has to be a cup and a handle pattern. If you wait for the cup and a handle pattern, you'll starve to death. There are other simple patterns, bases, that work. Look for a base that a 4th grader could see and say, hey, you know what, Mom? Hey, you know what, Dad? That thing's going sideways. Yep, I can get my crayon out and draw it. And they voted. They bought. And it made a nice move. Past keyless stock. Just study it. Pause it. Print these out if you want. That's why I'm doing this, is to help you. To help. There's another chart. Right here. Keys had been going sideways for a long time. Long time. Earnings up 42% when we bought it. Right here it pushes through. You can't see the big volume spike because of that big bar swamps everything. But again, nice long base. It pushes through that line on heavy volume, and look at the trend. Just walking up the moving average. Do you have to overthink it and say, oh, I'm up 5 points, I'm selling? Why? And again, I've been doing this since 1985, 86. There's a Wall Street maxim out there that says this: you'll never go broke taking a profit. I'm going to be really honest with you folks, and blunt. That's a lie. If your losses are bigger than your profits, you'll go broke. This is why at Mission Winners, and I hope you do this too, ride trends for as long as you can. Trending up the 8, trending up the 20, trending up the 50. Ride them as long as you can. There's another very important variable. It's all right to sell a little bit into strength. Here's why. By so doing, you've guaranteed yourself a profit. You can't lose on this stock. And by so doing, it allows you to hold on to it longer. Sorry about that. That was my oldest son calling me with a business situation. So anyway, nice trends. Nice trends is what we're looking for. Sell some into strength. As I was stating, from a psychological perspective, selling something into strength guarantees a profit. When you've guaranteed yourself a profit, you can allow your stock to work a little bit longer for you and move around a little bit more and let it trend as long as humanly possible. Anyway, I wanted to share that with you. My goal is try to help people. I'm always sitting there thinking, when I started doing this in 1985, 86, what did I need to hear that would have helped me? And that's why I do this, is to help. I thank you very much, and we're going to continue making educational videos like this. Thank you.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.